Now question number 20. Question number 20. Aarti and Bharti are the partners 3:2, means 3/5 and 2/5. They have admitted Sarthi for 1/4 share. 1/4 share in the profit. Sarthi brings capital of 50,000 and 10,000 goodwill. His share of goodwill 10,000. Okay, 10,000 for his share of goodwill. Goodwill already appears in the book, means in the balance sheet asset side goodwill already exists. So goodwill already exists in balance sheet exists. Goodwill already exists in the books of Aarti and Bharti, rupees 5,000. So when goodwill already exists and new partner, he brings his goodwill. So always he will insist that this goodwill is to be written off, and it is written off in old PSR, always old PSR. It will be always written off in old PSR, means 3:2. A will be a 3/5 of 5,000 and B will be a 2/5 of 5,000, means 3,000 and 2,000. So they will from their capital this will be deducted. Okay. So 5,000. The new profit sharing between Aarti, Bharti and Sarthi. New PSR they have given. New PSR is 2:1. 1 means 2/4, 1/4 and 1/4. Now to divide this 10 lakhs you want sacrifice ratio. So sacrifice ratio of A is equal to his old ratio minus his new ratio. 2/4 is equal to 20. 4 12, 4 5 5 2 8, 4/20. Okay, and of B it will be 2/5 minus 1/4 is equal to 20. 5 4 4 2 8, 5. So this is 3/20. So this 20 is of no use. Their sacrifice ratio of A and B, A is to B, will be equal to 4:3. It means that 10,000 will be divided in this ratio. Okay. Now you have to give the journal entries. So to give the journal entries, we require this one. Here we will write so that we can wipe it out. Sacrifice ratio of A is to B equal to 2:3, and goodwill we will divide in this ratio. Okay, so A will get 10,000. A will into 2/5. 2/5 means 4,000. And B will get 10,000 is the goodwill brought by new partner. So 3/5 means 6,000 we will get. So our calculations are ready. We will wipe this side and give the journal entries. Okay. So journal entry. Journal entry is first bank account debit. Bank account debit to S capital account. And to premium for goodwill account. Premium for goodwill account, this is 50 and 60,000. Okay. And 50,000 and 10,000. Okay. This 10,000 will be divided between A and B in their sacrifice ratio. You have to write in sacrifice ratio. In sacrifice ratio, you have to divide. So premium for goodwill account debit to A and to B. To A's capital account, to B's capital account, full you have to write. So 10,000 will be debited here and 4,000. I am writing in short, but you write in for A's capital account, B's capital account and practice in that way. Okay, so this is there. It will go to A and B's account. Now, when goodwill he is giving, he will insist to write off the existing goodwill appearing in the asset side of the balance sheet. So, that will be written off. 5,000 old is there, that will be written off how? So, that will be written off A debit, A's capital account debit, B's capital account debit to goodwill account. To goodwill account, because goodwill is appearing in the balance sheet, so to goodwill account. So here 3,000 and 2,000 and 5,000 old goodwill written off in old share, old ratio. It is written off in old ratio. It is in sacrifice ratio. Record the journal entries in the books of, so it is written off. This is there and this is over. This question is over. Now question number 22. Aditya and Balan are two partners. Their ratio is 3:2, means 3/5 and 2/5. They admitted Christopher they have admitted for 1/4 share in the profit. The new profit sharing ratio is new PSR they have given 2:1:1. A, B, and C. Okay, Christopher. He brought capital 50,000 and goodwill agreed. And goodwill agreed means he is ready to pay. Goodwill but not paid. He is agreed to pay rupees 15,000. Okay. But could bring only brought rupees 10,000 only. So 5,000 could not bring. 5,000 could not brought. Okay. So here is the clicks. Otherwise, question was like previous question we will do. So here 5,000 he could not brought. What to do? Out of his record necessary journal entries in the book of the firm. So we know that goodwill is always divided in sacrifice ratio. So first we will find sacrifice ratio of A. So A's old ratio minus new ratio. So old ratio was 3/5 and new ratio is 2/4. So equal to 20. 5 4 and 4 3 12. 4 5 and 5 2 10. So it is 2/20. And B his share is 2/5 was old and new is 1/4 equal to 20. 5 4 20 and 4 2 8 minus 4 5 . So this is 3/20 and their sacrifice ratio of A is to B will be treated. Sacrifice ratio of A is to B will be 2:3. This 20 we don't take. 2:3. So this is 2:3 means 2/5 and 3/5. Goodwill they will take 15,000 will be divided in this ratio. Means goodwill 15,000 into 2/5. A will get and B will get 15,000 into 3/5 is equal to 5 3 and 3 2 6 and 3 3 9. So this amount they will take. Now we will rub this side and go to the journal entry portion. Okay. So first entry is our bank account debit. Bank account debit to C's capital account 50,000 and to premium for goodwill account Oh, he is giving only 10,000. Brought 10,000. So 10,000 is giving. So how much in the bank? It will come 60,000. Okay, this amount is there. Now, these old partners, they want 15,000, not this. So how you will give? So we will debit first P premium for goodwill account, debit 10,000. And the portion he could not bring, for that we debit his current account or his capital account. If current account is there, we debit current account, because here question it is not given capital is fixed or fluctuating, so we will debit its capital account only, straight way. So C, otherwise current account is debited. In the question it is not given capital is fluctuating or fixed, so you presume it a normal, and C's capital account. C's capital account you debit. C's capital account debit 5,000, which you could not bring, to A's capital and to B's capital account, and it will be given 6,000 and 9,000. Okay. So here, instead of C's capital account, you debit C's current account. Because in the question nothing is given, you debit current account. C's current account. Because capital account need not to be touched. So C, whatever the money C could not give, his current account will be debited, and in future out of the profit or in future C will gradually deposit this amount in his account. So this will be C's current account will be debited and A and B will get their share. Okay, now next question we are going, 23 number question we are going to do. Okay, so we will rub and go to the 23 number question. Amar and Samar are partners in a firm. Amar and Samar are partners, and they are in the 3:1, 3/4 and 1/4, and they admitted Kamar for 1/4 share. 1/4 share of Kamar could not bring his share of goodwill, a premium in cash. The goodwill of the firm was valued at, so he could not bring goodwill. So his share of goodwill will be equal to firm's goodwill into his share. So firm's goodwill, the goodwill of the firm 80,000. So he will give 1/4, means 20,000, which he could not bring. This his share of goodwill, rupees 20,000, could not bring. Okay, could not bring. So he could not bring. Could not bring the goodwill. Record the journal entry on goodwill for goodwill on. So only this one they want. So this will be now 1/4 share from whom they are new PSR they have not given. New PSR not given. New PSR not given. One condition. And 1/4 from whom? 1/4 from whom? From whom not given. So in such a situation, their sacrifice ratio, sacrifice ratio will be equal to old ratio. Okay, you have to give a line in your answer. His sacrifice ratio will be equal to old ratio, as new PSR is not given and new partner is getting his share from whom it is also not given. So sacrifice ratio will be 3:1. Goodwill will be divided in 3:1. So now goodwill has not been, so current account of K will be case current account debit 20,000 to A and to B's capital account. So how much each will get? They will get in 3:1 in their sacrifice ratio. You will write sacrifice ratio, but it will always come this one. In calculation you will go, it will come this one only. So this is the shortcut. So 3/4. 4 means 5 3s are 15 and 5,000. So A is capital and B is capital. So B is capital account will be get. This is the general entry for goodwill. Okay, now we will go to question number 24. Question number 24. So Mohan and Sohan, Mohanlal and Sohanlal, they are the partners for sharing ratio 3:2, means 3/5 and 2/5. And they admitted Ramlal for 1/4 share. It was agreed that goodwill of the firm will be valued 3 years purchase of the average profit. 3 years purchase of average profit. Of how many years? Average profits of last 4 years. Of last 4 years. So 4 years profit is required. So first 1 year is 50,000 in 2013. 2014 profit was 60,000. Then 2015 it is 70,000, and 2016 it is 1 minute 4 year 2013 50,000, 2014 60,000, and 2015 90,000. It is 90,000 and then 70,000. Here, whenever you are finding this average profit method, you have to exclude abnormal profit or loss. Profit or loss you have to exclude and then calculate. Exclude and then calculate your average. Here nothing is given, so we are not reducing anything, but for this you have to be careful. If abnormal profit is there, you reduce it. If abnormal loss was there, you add that loss to the profit. Okay, so now total 5 से 11 9 27 3 average equal to 270,123 divided by 4. 7 6 चौक 24 24 3 30 30 4 28 28 और 4 5 20 1 2. This is the average profit. So goodwill will be equal to 3 years purchase, equal to 3 into 67500 equal to this is of the goodwill of the firm is coming. Now R will give how much? R's share will be 1/4 of firm's goodwill. Okay, so how much it will come? 5 चौको 20 0 2 नहीं जाएगा 25 4 6 24 24 1 10 4 2 8 और 4 5 20. So this is R's share. R will give this much. R's goodwill portion is this one, and it will be divided in among them. Okay, record the journal in the books of firm. On Lal's admission, goodwill already appears in the books 2,02,500. Whatever goodwill already appears, that has to be written off in old ratio. So old goodwill account debit. Goodwill account debit amount is 202,500 to M's capital and to S capital. Okay, and in old PSR goodwill written off. Okay, old PSR goodwill will be written off. So 2,02,000 we will divide by 5. By 5 we will divide 2,02,500 divided by 5 into 3. So 5 चौको 20 0 5 5 25. Okay, so 0 0 5 3 15 हाथ में है 4 3 12 और 13 131 and others it is 2/5 so others it is of M. Now Sohan he will get 81,000 so total is 500 102 500 so total is not I think some mistake is there 5 5 20 so M's capital will be debited by 1,21,500 and S will be 81,000. Okay, first this old goodwill will be written off. Now this new goodwill 50,625 it will be divided. It will be divided in their sacrifice ratio. So goodwill already appears means it will be written off. Goodwill okay, and this will be divided in PSR means goodwill of the firm this one. So Mohan will get 5625 into the new PSR into profit sharing ratio 3/5 because it is not given from whom his new partner is taking his share, so their old ratio will be sacrifice ratio. So in sacrifice ratio we are dividing, but it will be always equal to the old ratio. So Mohan and Sohan he will get 50,625 into 2/5. So this amount they will get. Okay. Now goodwill will be written off. Another question is, and this amount will be divided to M. M will take. Goodwill appears in the book at 2,500. So even if 2,500 is there, it will be written off. So now condition number B. Condition A is over, now condition B. So 2,500 already appears in the book, so 2,500 you debit in their old ratio means 5 means 15,000 1,500 and 1,000. So this will be there. Now C point. Now again C point is coming. C point. And that goodwill distribution will be there. I will write that entry once let the ABC part is over. Goodwill appears in the book at 2,05,000. So 2 lakh, whatever the amount is there, you have to write off. 2,05,000 is there, and you write off in 3,205 into 3/5 equal to 824 means 2 और 4 12 and 282. So it will be written 1, 2, 3 and 82,000. So this is existing. Ramlal did not bring his share of goodwill premium in cash. So he did not bring, so his current account we will debit and give credit to the others. So first of all, this existing goodwill you have to write off. So existing goodwill is written off. Now the question is, he does not bring his share of goodwill. So his share of goodwill was 5625. So Ramlal's current account debit 50,625. Ramlal's current account debit to M and to S capital account, and it is for all the A option, B option and C option. This entry will work. So here rupees, here you have to write the rupees. So I have to calculate now. There is no other go. 10 1 0 5. Okay, into 2. So 5 2s are 10, 2 1s are 2 or 20 and 3. So 15 and 3 1 3 and 30 25 3 2 5 0 3 2 5. So here one, this is Mohan, this is Sohan, this is Sohan, this is Sohan, and this is Mohan. Okay, so this amount we will write here. Mohan 30,375 and 20,250. This they will take. Current account, the amount he could not bring, for that current account his current account will be debited and existing partner will be created in their sacrifice ratio. You have to write the narration. Okay, and whatever goodwill is appearing in the books, it will be always written off. Okay, now question number 25 we are going to do.